One of China's most powerful technology companies asked its domestic memory supplier for lower prices. CXMT reportedly said no and then ordered Huawei linked engineers to pack their tools and leave its research facility floor. Now that sounds like a corporate feud, but it may actually reveal something a lot bigger. That the Chinese capacity many investors expected to break the global memory shortage is currently in short supply too. So in this video, we're going to go over what has happened inside CXMT, why Chinese supply is already accounted for, and why this change may be bigger than it seems. Let's begin, shall we? So Reuters have released this article which is really interesting. It says how the twin stars of China, CXMT and YMTC, changed the chip game. And the article tells us everything we need to know about the altercation. It says that for months, Chinese chip manufacturer Jiangxin Memory Technologies, CXMT, had been hiking prices on Huawei, one of the country's biggest technology companies. The chip maker held firm when Huawei demanded relief from the escalating costs, according to two people familiar with the matter. The standoff came to a head on CXMT's factory floor in June. A group of engineers from a chip-making equipment vendor with deep strategic ties to Huawei had been working in the clean rooms at CXMT's core research and development zone in Hefei, Huanhui province. Hope I said that right. Without warning, CXMT ordered the engineers who had been helping with equipment maintenance to pack their tools and leave the factory floor immediately. The article goes on to say that executives at the Huawei connected equipment vendor Sea Carrier concluded that confrontation was the result of a power struggle between CXMT and Huawei. The companies still do business, but the engineers haven't been allowed back into the R&D zone. And this altercation happened simply because the likes of Huawei are not used to and do not like the fact that the memory makers of the world, especially the domestic makers like CXMT, hold all the cards, when in previous years they're the ones, CXMT are the ones that had to go cup in hand to the likes of Huawei to get increased margins. Now the tables have turned. To illustrate this point, the article goes on to say that the global AI build-out of AI data centers has transformed the humble components into one of the world's most sought-after products, sparking battles over pricing and a scramble for supply. The Chinese memory makers are now picking clients and dictating prices. In some cases, they are charging more than their largest South Korean rivals, Samsung and SK Hynix, as skyrocketing demand for memory chips forces Chinese buyers to pay ever higher prices. CXMT this month signed a 5-year agreement with ByteDance, TikTok's China's owner, worth more than $7 billion. Three people familiar with the arrangement told Reuters ByteDance didn't respond. What's crazy about this whole instance is that only a few years ago, it would have been hard to believe that someone from CXMT would be willing to potentially humiliate someone working for Huawei. Yet, here we are. But what does that reveal to us about the Chinese memory dynamics? Well, as we have already seen, memory from China is beginning to cost more than memory from the likes of Samsung, SK Hynix and Micron. The article goes on to say that Chinese memory chips were long seen by foreign executives as alternatives to Western and South Korean products, but that's no longer the case. In recent weeks, CXMT has charged more than Samsung's roughly $1,240 per unit price for comparable 64GB DDR5 server memory modules. So this proves then that Chinese memory isn't automatically cheaper than their South Korean rivals or American rivals. And also interestingly is this paragraph here. Several Chinese electric and tech firms complained to China's Ministry of Industry and Information Technology this year about price increases by CMXT and YMTC, blaming the hikes for delay in product launches built out in China. And we sort of already knew that there was pressure from China anyway when it comes to domestic demand, because Semi-Analysis has this interesting report which I'll read out here. It says, it becomes clear when we run a simple cost per bit analysis on DDR5 products across the memory suppliers. For DDR5, we can find that CXMT's cost per bit remains meaningfully higher than that of the three leading suppliers by more than 30%. However, because DDR5 pricing was already exceptionally strong in Q2, Q1 26, we believe this still lifted CMXT's gross margins of over 70%. Essentially, that their price is higher simply because it's scarcity driven. Basically, what I'm trying to say here is that, yes, China are asking for a lot of money for their memory, but it's mostly driven by the fact that there's a massive scarcity of memory in China, more so than in America, and that's driving up prices further. So then how much capacity does China actually have? Well, that's a very good question. Well, Semi-Analysis figures currently suggest that they are able to provide roughly about, or CXMT at least, are able to provide around 350,000 wafers per month by the end of this year, growing to about 500,000 by 2028, which would mean then that they are already going to be larger than the likes of Micron. And even if you dispute those numbers, the Shanghai Stock Exchange has this report that came out about CXMT, because they're going to be filing an IPO soon, basically saying that according to the company's prospectus, CXMT reported the revenue of about 61 billion won in 2025, up 155%. Which means then that the prospectus showed that based on production capacity, shipments, sales revenue, the company has become the largest dynamic random access memory maker in China and the world's fourth largest DRAM supplier. The company has established deep connections with key industry clients, including Alibaba, ByteDance, Tencent, Lenovo, Xiaomi, etc. So they're a big deal and they're growing. But don't worry, because if you're worried about that extra supply, you should remember that actually Chinese CXMT memory isn't actually able to compete with the high bandwidth memory that SK Hynix and Micron and Samsung are able to produce. Currently, of that massive 350,000 wafer supply a month, about only 5,000 of it is actually being used to produce HBM, so there's nothing there to worry about. And the reason for that might be obvious, but I'm going to say it anyway. The Chinese memory makers, Korean and American competitors, make DRAM chips using ASML's more advanced extreme ultraviolet lithography machines. China has been barred from obtaining those machines since the Dutch government began withholding export licenses in 2019. While CXMT has produced its own high bandwidth memory, remember, about 5,000 a month, an ultra-fast format that is crucial for its AI, 5 sources said it remains 2 generations or several years behind its rivals. If more restrictions are imposed on lithography machines, that would be the biggest challenge for these Chinese memory makers. So remember, they aren't actually able to compete on scale when it comes to HBM at the moment. So essentially what I'm saying is that China is obviously, anyone knows what China's doing, they're building out as hard and as fast as they can, and they have enough capacity to be the 4th largest player in this scene. But they don't have the equipment available to them, at least from what we can see, in order to jump and become the 3rd, 2nd or 1st best in the area in which memory is going towards, which is high bandwidth memory. They aren't able to do that as of yet. But then the question becomes, how much extra capacity can China offer in the future? Well, as we have already seen and have been alluding to, they're going to be providing and producing more supply in the future, which will become global supply and increase and affect the price overall. As we can see in this Reuters article, Chinese authorities have asked CXMT and YMTC, who produce the NAND, CXMT produce DRAMs, YMTC provide NAND, to prioritize supply to domestic firms. 3 people familiar with told Reuters. But the chip makers also plan to expand manufacturing capacity, which would allow them to serve both China and overseas markets as soon as 2027, when new fabrication plants come online. CXMT is building 2 new plants in Shanghai and Hefei, hopefully I've said that right, and in talks with local authorities elsewhere about a third. Those projects could more than double production capacity to more than 600,000 wafers per month if it all goes to plan. CXMT's capacity would then overtake Micron by 2030. And that extra capacity means that CXMT will move from producing 5,000 wafers per month of HBM to what semi-analysts believe up to 100,000 wafers by 2028. In their own article, which I'll link in the description, it says, to that end, in our estimates, we factor in government influence for CXMT to allocate more wafer capacity to HBM over time. I think that's logical. It's going to be the way forwards. As a result, we expect CXMT's HBM wafer capacity to accelerate materially in 27 and 28, with its HBM technology improvement supported by continued growth in China's domestic compute market. We estimate CXMT's HBM wafer capacity will reach 55,000 to 100,000 wafers per month in 27 and 28 respectively. This would increase the company's share of global HBM to about 12%. Remember, they've got about 7.7% of global memory demand as of 2025. So them jumping to about 12% of HBM, which is where the memory market, at least for DRAM, is going, would be a marked improvement from where they were just last year. Obviously, a lot of those numbers are hinged on one of the most important things, which is the fact that China don't have access to all the technology they need, as we've mentioned before. Because of US export curbs, China has access only to previous generation deep ultraviolet or DUV machines, which can't etch with as much precision. Huawei has developed a multi-step method for producing 7nm chips using DUV, but it complicates circuit layouts, introduces more opportunities for error, and slows output. So basically, there's more opportunity for error, meaning there's going to be a lot more wastage. So basically what we're saying is that China have been building out more supply, their intention is to produce enough memory so that not only can they satisfy local domestic demand, but also some parts of global demand. So CMXT can expand, which we would expect. China don't want to just take over China's market. They want to own the global market. But the question is what they're producing, is that enough? Is it what people want? Is it going to be producing it at the correct amount of yields? And can it actually affect the price of memory? In 2026, we know the answer is no. Domestic demand is already, as we have seen, so high that they can't actually keep up with supply. But in the next few years, that might be different. Essentially, what we'll see is that in the long run, more capacity will be put onto the market and prices will begin to fall. The question that remains that no one can really answer, and this is the bet that investors are making, is whether demand keeps up, meaning that will there be increased investment and quicker adoption of AI that may require even more investment in this area. We saw Google begin to increase their capex guidance only a couple of days ago from 180 to 190 to about $200 billion for 26, and could move even higher to about 300 billion in 2027. Imagine if AI and the more sophisticated models that they're able to use and bring online and the agents that they're building are more widely adopted worldwide at a faster rate, that could increase demand for memory even more. That's the bet people are making. The counter argument and the counter bet is that there's some sort of miracle in compression of data and memory, and things become a lot more efficient, and you're not going to need as many data centers, as much memory, and as much physical capacity, because you're able to do a lot more with a lot less. Or obviously, that's the counter argument. But as things stand, more memory is hitting the market. HBM is going to become a priority from China, but it's also becoming a priority for majority of the DRAM providers. That's where the market's going. It obviously has issues producing DRAM simply because there's more of a miss factor when you're producing it because of the amount of precision you need. And there you go. So this is an interesting one, I think. A lot of people thought China would be able to open up the door to more capacity and increase supply and reduce the pricing pressure. Unfortunately, that doesn't look likely. I also think people are really missing the mark when it comes to China's desire to prioritize their own success. A lot of that extra capacity may only just satisfy local demand. We'll have to just wait and see. Anyway, if you enjoyed this video, please give the video a like and a subscribe. I really appreciate it. And yeah, I'll see you in the next video. Bye for now.